Good morning, it's Jeffrey Cohen. How are you? It's Friday, June 17. I'm very confused about the market this morning. I will admit, I've been looking for what to tell you. Got my model runs, looked at futures, looked at Twitter. Nope, nothing. It looks almost like everything is snapping back to normal, which I know is odd because yesterday the markets were down 4%, 4%, open lower all day. But yet today everything's calm. And what do I mean by that? If we look at the stock futures, it's actually pretty calm. So guys, if you're out there, if you're watching, go ahead and ask a question because I'd be curious to see what you're thinking. So what do I mean by that? So West Texas Intermediate crude is down to 115. Gas is 389. Now it's still high, but it's not like the 420s we were seeing. The VIX is at 31. There's that little voice in the back of your head saying markets could move 1.5%, 2% in a given day. You know, the Nikkei, the Bank of Japan was defending Japanese bonds to a yield of 0.25%. And they were buying unlimited amounts of bonds, at least they said. And yesterday it broke. And yesterday they gave up. So panic was supposed to happen. The streets were supposed to run with crazy people in Japan. Instead, none of that happened. You know what happened? The Japanese yen is back to 134.68, supporting exports. The renminbi is at like 6.7. I hate when I don't remember currencies. Get over here. And I don't save renminbi. It's just not. I don't even know you can trade it. So 6.70. So it's not quite to 6.8, but it's high. It's on the higher end. So currencies. Look at the euro dollar, 105.05. Canadian dollar, I also looked. Where's that? That's not, 129.87. Everything's normal. Okay? So, Forex is normal. Crypto, it's so interesting. It looks like it's setting up a new support level. Who knows, right? But we could be looking at Bitcoin settling in at around 21,000. By the way, after the initial bloodletting, people won't trade it. Why not? I saw it on Twitter. Everyone's like, oh, well, it's time to get back to Bitcoin. It's 21,000, right? You know, it used to be $35, right? It's still pretty high. So, I don't know. Normal. Look at that. Oh, green. S&P 500 is going to be up 1% at the open. Nasdaq up 1.3. The Russell up 1.2. And maybe this is... let me finish, but why my heart is so heavy this morning. My heart's a little heavy this morning. 30-year bond at 134.7. I mean, this thing had cratered down. It was going to touch maybe even like 131. And it's back up again. The 10-year note is snapping back to support, it looks like, which is 118. So this is crazy talk, right? Like, you've got yields coming back. So I look at all this and then I realize, oh, it's OPEX day. It's options expiration day. It's going to be a crazy day today. Like really crazy. And so that was one thing I wanted to share. The second is I had mentioned in a previous video about new lows and new highs. And so it's something we look at. It's anecdotal at best, but it's interesting because stocks that we look at, stocks that we are profoundly interested in, are dropping. A lot of them are dropping, and they keep dropping, right? And so I guess if you had unlimited money, you'd keep buying them. The problem is that the guys on the short side have unlimited money too, and they would keep shorting them. And I don't know. You're never going to figure it out until fair value is hit. But you got 46 new highs. You got 28.94 new lows. So 46 new highs out of 1,000, 1,100 advancing is roughly 22. So for every 22 stocks that went up, one was at the 52-week high, 5%. Now so there were 7,254 decliners yesterday, which doesn't surprise me right there, and 2,894. So for every 2.5 decliners, you had a new low. That's 40%. So for stocks that are going down, they're touching their new lows and they're breaking through new lows, 40% of them. So, okay, that in stocks that maybe that's high. So let's take a look at corporate bonds. So you guys are probably wondering, why do I like corporate bonds? Well, I like corporate bonds because debt is the flip side of equity. Because companies borrow money thinking everything's going to be fine. I just got to pay the interest. But the reality is the debt itself has a value. And the money invested in debt is huge. And it affects investors, and it affects companies, it affects governments, it affects everybody. And so it's important. And there's corporate bonds, there's agency bonds, and then there's your treasury yields, which is U.S. Treasury, which in theory has no risk. We are the reserve currency of the world. Therefore, there's no risk because if we can't pay our bills, we just print more money. Which, by the way, Banana Republic is how you get 9% inflation. Because you print too much money and you drop it out of helicopters for people in order to get votes or to make people feel better. So let's take a look. Where am I? This is FinRetrace. So this is the database that people send their trades to. So Advancers declines, all issues, corporate, was about even, right? 4,000, 4,700. So great. Good day today, right? It was yesterday. But the new week highs are 28. So out of 4,000 advancers, 28 new highs. That's about 1 out of 12, 8%. Okay. Decliners, 4,700. 2,700 hit new lows. So we're going to call that 55, 60%. So, it's a lot. That's like for every 1.75 stocks or bonds that went down, one of them was touching a new low. So that's decimation. I mean, I just got to tell you, like 100 to 1, almost 100 to 1 ratio on new highs to new lows. Where's the stock one? We go back to the stock one. Oh, come on. Where is it? I don't know where it is. Doesn't matter. 100 to 1. Okay. So a lot of new lows. So here's the thing. I started looking yesterday at a couple of stocks because I thought, I'm going to make some more investments. And, I pull up the 10Q. I pull up their 8Ks. This is in the Securities and Exchange Commission Edgar database. Companies report all the stuff. The markets are very rational. Yesterday, individual stock prices were rational. It blew me away because, in particular, we're doing a lot of work now in the regional banking space. And one particular regional bank made our database a special set of companies, and it was an anomalously trading. And so I go back and I realize, okay, made sense. And I'm getting a lot of gump right now about steel companies, how they're the best things since sliced bread. And I want to share with you what I found. So the one particular steel company is Cleveland Cliffs. I'm going to keep talking about Cleveland Cliffs. I first off, I love the company, right? I love what they do. And from a national security perspective, we need companies like Cleveland Cliffs. Don't need that. You don't need that. You do need... We'll just do a weekly view. This is not a trading view. This is just a weekly view. So if you look, the stock's down half. And honestly, right, you've been punished if you bought the stock. You bought it at 20, you felt good about it. You went up, you came down. Now, if you bought the stock at Now, if the stock was kind of riding at 10 and it went up to 19 or at 17, you'd feel great. So what happened was we take a look at the U.S. Midwest Domestic Hot Rolled Coil Steel Index. And right now, so it's coming off 1,400. I remember seeing 1,400, right? 1,384. So June is settled in. It's kind of past us already, but it's settled in at 1126. But if you want to sell November production or October production, you're going to get under 950. Pretty much if you're selling 950, 930, 928, 919. So if you're Cleveland Cliffs, you're negotiating your contracts with your buyers, the buyers of your customers. And every day you come to work and you can ask for less money for your best product. Hot rolled coil steel is the best product. It's the one that, I already explained this yesterday. You use it to make cars, appliances. It's the high quality stuff that you can bend into shapes. It's nice, right? You want high, and you get them in the big coils. You see them on the big tractor trailers, right? Coming to your town with the big coils on them. Well, that's what it is. And the point is, the cost of the coils most likely is going up. So let's take a look. So Cleveland Cliffs bought AK Steel, which is a electric arc furnace company. So they take recycled steel. I don't know if anyone cares about this, but I care about this because it's something I know about, right? So let me just finish. I'm so sorry. Let me finish. So ferrous scrap is $535 a ton. Hot rolled coil steel, the best steel, is $919 a ton. Now, you don't use ferrous scrap to make hot rolled steel unless you are clever. You use an integrated system which starts with, coking coal and iron ore, and you work your way up through with a pure integrated steel production process. So you use scrap to make crap, basically. You make the rebar, pipes. It's fine, right? Construction shapes, maybe. So if we look at iron ore, I can't tell whether this is good or not, right? But iron ore is trading at about 130. If you go out far enough, so 140, and if you go out far enough, you're down to like 120. And so when I look at this, I think it's going down, right? You lost $10 on your tonnage. So Cleveland Cliffs most likely sells iron ore, buys ferrous scrap, and sells hot rolled coil steel. And so its three major things are negative. Now, it uses a lot of energy because you have to melt the metal. So we know energy's up. Electricity, electric arc furnace, electricity is up 25% this year, nationally, all uses. I don't know what it is for their particular industrial plants, but my guess is it's up. Transportation's up. Cost of transportation's up. So my guess is that Cleveland Cliffs, which made a boatload of money. I mean, it was so nice to watch them make money. Is probably going to be on the south side of $17 pretty soon. So it's rational. Markets are rational. That's just all there is to it. And so the markets aren't going anywhere. Look at yesterday. It was awful. It was down 4%. I'm sitting in McDonald's. And I'm watching the markets because I had to take my daughter to camp. And, oh my God, it's awful. So I don't know what the market's going to do today, but the market looks awfully calm. And maybe that's my issue today. It looks too calm. You still have tons of new lows. You still have problems, right? It's awfully calm. So let's take a look at yields. Looks like this thing finally updated. So funny. So 3.35% long-term yields. I don't know that that's right. Let's go to the trading. Let's go to the videotape. 30-year bonds are trading at 3.29er, right? If we look at it over the 30 days, look at it over a month, you see that yield was under 3 and it's gone up to 3.4. And it's at 3.28. So it's up. 30-year treasuries are up. Now it makes sense, right? The Feds pushed the lower rate up 0.75%. The 10-year treasury at 3.22. So 30-year at 3.28, 10-year at 3.23. It makes sense. It's not an inverted curve, but you can see it hit 3.5. Part of that is because quantitative tightening, I believe, and all your reverse repo and your securitized transactions that the Feds do with the banks, a lot of them use 10-year treasury notes. Now we take a look at the whoa. Okay, so this, guys, is heavy. I should have started with this. The 1-month treasury bill is at 1.14%. All right. Red day today in the markets. Okay, Jeff, why do you say that? Well, this is your risk-free rate. You can get 1.14, which means your money markets. If we go to bank rate, I bet you're going to see 1.2, 1.3 popping up all over the place, right? Because this is your risk-free rate for 1 month. And if you've got money markets, they're going to want to beat this rate. So your risk-free rate goes up, which means your model return rate goes down. Not that everyone trades off a model, but the big guys do, right? And they got risk models too. So I want to show you something. Maybe now I'm going to get excited for you. Maybe I got something. So first off, this is pretty negative 1-month treasuries up like this because it means everyday money is getting more expensive. Anything else to talk about? Let's take a look at the COVID numbers. You know me, I like to look at the COVID numbers. Where's hospital? New hospital admissions. We're going to add that. So this is something we saw. So this is the United States. 7-day moving average is red. The actual numbers are in blue. Yellow is new hospital admissions. And what we see here is that as cases go up, hospitalizations go up. We're at a much lower rate of hospitalization than we have in the past, but the rate of hospitalizations is going up. So 4,300 new hospitalizations on June 14th compared to 143,000 new cases. So no, this math is simple. 138,000 new cases, 4,300 new admissions. So you're talking about roughly 2.5% of people who get sick with COVID today are hospitalized today. And so it's probably something about a trailing number. So we're not done with COVID. It's still out there. And so I think that's still going to affect the markets. U.S. banking stress indicator could worsen after Fed rates. We are very nervous about the banking system, just so you know. One of the reasons why we look for one of the reasons we look at these long rates is if you borrow short and lend long, then when short rates go up and long rates go up, you suffer. You suffer on both sides. Because your cost of money, I'm attracting deposits. I'm a bank in Cleveland, Ohio, Highland Park, Illinois, and I'm attracting deposits. My cost just went up on new deposits. Now, old deposits, non-interest-bearing deposits, it's fine. I support the Little League team, and the Little League team parents put their money in the bank for no interest. That's great. But real money, big money, is going to come in. I'm going to have to pay for it. Hot money, right? So now I'm invested in 10 and 30-year treasuries, or I'm invested in mortgage-backed securities. And so what happens is I'm invested in mortgage-backed securities because I make mortgages. I know the mortgage industry. And so I'm just going to do a bunch of mortgage-backed security stuff. So let's take a look. Here's a mortgage-backed security index. And over the year, it was nice, like 140, 147. Yeah, peaks up right at the end of the quarter there. Oh, love it, love it. 140. Save us. So at the end of last quarter, it was 140. Now you're at 130-ish. So if we end this quarter, let's say around 130, from 140, it's down 3%. So your banks that invested in mortgage-backed securities are going to lose 3% on their investments on average. On bonds, 30-year bonds, where were we at the end of March? This is important for you guys to understand. Where are we at the end of March? We were closed at 150. So your money was in 30-year bonds at $150 for every 100, basically. So now you're at 135. And let's say you finish at 135, you're down 10%. So any money that you have invested in 30-year bonds, you're down 10%. So your cost of new funds went up, and your asset value for old funds goes down, or for old investments goes down, and it's a double whammy on regional, community, and the large, U.S. nationwide banks. And so we watch this. Now, who knows? It could reverse. It could all come back to normal. It's fine. But it's funny when I see that, right? So Quifin's worried about that at least they posted that. And so what else did we see on Quifin? I do like it. I was just so surprised yesterday how it really came down over 5 days. That market, it gapped down once and it gapped down again. So gap downs make you nervous, right? Because it means you don't want to hold positions if you're a trader overnight. Gap down means I'm scared. Gap down means I can't rely on the value of my assets. That's concerning, right? And it's across the board. These are U.S. equity factors, right? Small cap did just as badly as mid cap. Mid cap did worse than large cap. Growth did worse than value, but not by that much. It's a broad-based decline in stocks. I love this. It's so fascinating, right? But this is negative. And so the one thing that kind of triggered, though, was a 1-month treasury at 1.14%. This is high. If this stays high, if this hits like 1.5%, this is a game changer for equities. And it's a game changer for you out there. So let's take one last look at the futures. We've got the Russell. I'm going to pop them up on the full screen. And we're going to keep the long look here. We're going to look at the weekly chart. So the Russell for a long time was right around 1,500. These are small caps, right? So you're swapping them in and out, small cap stocks. And of course it dropped with the pandemic and it came up and it looked like it was going to try to come right back to 1,500. So then it popped way up, right? Dropped money out of helicopters. It's really great for people. And then it comes down. And we're approaching that 1,500 level again. And so it might be, if I draw a little line here, it might be okay. Right? You got kind of pre-pandemic high. Right there. I mean, you broke through support from like a year ago, 2 years ago, 3 years ago, right? But it's possible you're going to kind of start to revert back to that mean. At least it's not that surprising. So when we show you Nasdaq is down, by the way, Nasdaq is down 28% over the year. That's awful. 28%. So if you bought and you sold. But for right now, who knows, right? You're approaching support levels from 3 years ago. Let's take the same look at Nasdaq. So Nasdaq doesn't really have that flatness that you saw. It's just been relentlessly climbing with innovation in the U.S. market. This last push was quite high. So if we try to draw this line, it's going to look a little different because there's nowhere to really draw it from. So pre-pandemic, you were here. Still a lot of room. You're looking at Nasdaq under 10,000, right? If you try to get back to where you were pre-pandemic. That's another 10%, 15%. It's possible. Nasdaq's been down 20% this year. Look at that drop. What's another 10 or 12%? It's probably not that big of a deal. And if you take a look at the volume figures, you can see the volume was quite high during this last little leg of drops. And so it's falling through with a fair amount of volume. Okay, it's fine. I'll just take a look at the S&P 500. These are the E-mini futures. I think you're going to see something similar here. If you get to pre-pandemic levels, you're looking at 3,300. Which again, it's only a drop of another 10, 12%. It's not that big of a deal. It's funny to say it that way, but it can drop, but it doesn't have to. Look at that raised volume confirmation. You had a big selling day towards the top. You had a big buying day, big volume day, as it tried to do like a little bear rally. The last bear rally was on very low volume, and then it dropped on very high volume. So the market's dropping on high volume. People are liquidating. People are cleaning up their portfolios, are getting ready for the summer. They might have sold in May and gone away, for all we know, right? But look at that. 10%. I'm not shocked. Especially when we go back to the new highs and new lows that we talked about. You get interest rates are up. You got 2,700 new lows on corporates. Let's take a look. Let's take a look at agency debt. It's more than 10 to 1. It's 13 new highs, 172 new lows. What I always find interesting is 121 declines in all issues agency debt. So it looked like advancers beat decliners, but yet there's more 52-week lows. So some of those that ended up advancing towards the end of the day must have hit new lows, tested new lows, and then were kind of rescued towards the end of the day. And so your agency debt looks bad, a lot of new lows. Your corporate debt looks terrible with new lows. Your stock market looks bad with new lows. So I guess what I would tell you, 46 new highs yesterday, 28.94, is watch out for bottom fishing. So maybe that's my number 2. Number 1, short rates are going up, long rates are going up, and short rates are going up really fast, by the way. They're like double where they were when we started talking about them. And you've still got a lot of stocks hitting new lows. And so just to show you, it's not, we're no genius here, right? So one of our holdings is CRBP. It's Corbis. Every day it falls. Every morning it's up in pre-market, and every day it falls again. So the stock, JB Therapeutics, Corbis, whatever, they do immunology. They do immune support by working through inflammation. So things like lupus, SLE, DM, they're small patches of people who get sick with those. They're like orphan diseases, but they're important diseases, and they think they have a way of working your body's response to certain diseases to help eliminate tumor growth, as an example, and reduce tumor growth. Possibly to work on obesity. It works on mice given a high-fat diet. And so, it's the cannabinoid system, so people lump this in with cannabis stocks. But nobody gets high at Corbis. This is not what that is. This is about using the medicinal properties of cannabis, or the system in your body that cannabis works on, to make you better with cancer and with really bad immune response stuff. Like you get those blotches on your skin and you get weakness in your muscles. Well, you can use some of their experimental drugs, and it helps with certain patients. Linabacin is one of their drugs they've been working on. And so you take a look at the stock, it's just a relentless fall. We look at a weekly chart, it's just going down. It's basically going down to zero. At this rate, this stock hits zero. And we're in it. And we're riding it down. Riding it down like a bad movie where you just don't know when it's going to end, and it never ends. It just keeps going down. So we own Corbis stock. We believe in the Corbis mission, but we suffer with everybody else. And so it's not hard to understand why the stock would keep falling. So somebody wakes up in the morning and says, I want to make 5% today. You know what? Pre-market Corbis is at 25 cents. I'm going to short it at 25 cents. And I'm going to buy it back at 23 cents. I just made 10%. That's it, or 9%. It's done, right? You can do that. You can do that over a week. You can do that over most days. Look at those moves day in and day out. There's enough spread there that you could make a day's wages just trading Corbis to the negative every single day. And there are people, I believe, that do that. And so until that goes away, there's nothing here. I mean, there's no news. There's no breakthroughs. It's just pain. And so this story gets continued over and over again. And the hope that springs eternal, look at that. It dropped from 50 cents to 21 cents. Oh, it popped to 30. I'm 35 cents. I'm going to make a fortune. I buy at 20, I sell at 35. I bet you if I buy at 23, it's going to go to 50 cents. These are all pipe dreams. Just until liquidity picks up, until the market picks up, I would stay so far away from stocks like Corbis, which we're invested in, because new lows are going lower. And that's it. So let's take one last look at the futures. Normal day today. That's the message. I don't understand why the day looks normal. It's going to be up today, it says. Open higher. 1%, 1.2, 1.1%, 0.8, 0.9%. So you have a lot of options expiring. You're going to have a lot of momentum in this market today, a lot of movement, a lot of velocity, a lot of trading minute by minute, hour by hour, a lot of gamma work, right? Where people have contracts and they want to lock in their savings. And so looks like right now 30-year bond is going to try to breach the 135 level, right? I mean, it's interesting stuff. So good luck today in the market. By the way, we're not paid to make these videos. We do it to share information with you. We also do it to kind of cultivate our messages and our trading strategies. Our biggest trading strategy right now we're not talking about, but we will. We get enough interest. And so what I would say is this: please hit the subscribe button. It's a red button. It lets us know, and more importantly, it lets YouTube know that you're watching the video, that you like it. And then drop a comment below. We respond to your comments. We actually like it. And not just the comments that talk about somebody who's got a Bitcoin chat room with a crystal ball, and if you pay them $100, then they're going to read the crystal ball for you. That's not what we do, and we're not affiliated with that. But those are the only comments I get right now. So drop a comment, a real comment, right? And if you'd rather, find us on Twitter. We tweet most days Chicago Quantum, Chicago_Quantum, and we usually post our YouTube videos there as well. And thanks for listening. Good luck in the markets today. Be safe. Take care.